if price was going to break past this low, then we're going to get to this particular order blocks high, which is this particular line right here. So you can see how it was kind of very, very easy to engage price right here. And I didn't sweat so much for it. Hey guys, and welcome to today's video. So in today's video, we're going to be discussing how to think like a pro trader. So we're going to be looking at how traders think and from a professional standpoint and how that can benefit you in the long run um, in the forex financial markets. And I'd like to say thank you for those of you that reached out. I know it's been a while since I posted, and it's actually been a while. A lot has happened on my own end, and I've actually missed posting. So this me, welcome back, I believe. So those of you that have questions and have a lot that you want to reach out to, or you want me to help you with, you can email them to me, and I'll be sure to get back to you. Or you can leave your thoughts in the comment section, and definitely I'll be there to um, give you answers to those questions that you asked. So, without further ado, I just want us to see um, something very, very briefly, and we're going to look into the charts. How do pro traders think, and how that can benefit you in the long run? It's enough for me to come up with a chart and point out, okay, number one this, number two this, number three this, but I just want to actually just focus on one particular thing. And one particular thing, I believe that if you start practicing it, you get what I'm trying to say. From now, it's going to really build and build your character as a trader, and also help you become a profitable forex trader or profitable financial trader um, that you desire to be, or you want to go on to be. So, what is this particular thing needed to be a pro trader, or how do pro traders think? Pro traders think from the perspective of patience. Now, when I say patience, a lot of you are like, oh, I know that, and it's common. But it really is that most of the times, one thing I figure out is that the simple things in life, or the common things in life, are usually not common. They are usually overlooked. I don't know how many of us have really watched Avatar: The Last Airbender, and if you've really watched the movie, the Avatar: The Last Airbender, you probably hear about the guy named Bumi, King Bumi, the king of the Earth Kingdom. And while Aang went to meet him, I believe that should be the season two of The Last Airbender. Avatar went to meet him and told him to teach him earth bending. He said he can't be his earth bending teacher, and he told the Avatar, which was Avatar Aang in the series, said that the kind of teacher he needs to find a teacher that actually listens. So that really got me even while I was watching the movie. You get this? It made a lot of sense to me, and just come to think of it, that is what Avatar 8 went on to do, and he found the earthbender named Toph, and we all know, for those of us that are bullshit, we understand what now happened, and why finding an earthbender like Toph could actually be the greatest asset, or the greatest, made the most difference in Avatar in training. We now figure out that if you watch towards the last episode and towards the ending, we now figure out that the ability to be able to list him was what actually saved the Avatar when the Fire Lord was about to attack him from hindsight. Since he had learned the ability to be able to listen, he was able to be more proactive. You get it now. So this is one characteristic of being a patient, or developing the character of patience. We've all probably, those of us that study a lot, we've probably heard that patience is virtue. The ability to be able to be patient. Now, the ability to be patient is the ability to be able to listen, just like what King Bumi said to Avatar In. You need to find an earth-bending teacher who listens, not just an earth-bending teacher that is skillful. It's not just enough to be skillful. It's not just enough to be able to call prices where they are going to get to. You know what I'm saying? That skill, anybody can achieve that skill, but you want to be able to find a trader that is able to listen. You know what I'm saying? You want to foresee that particular trader is able to listen to the marketplace, be able to understand, okay, what is price going to do? Is this the right condition? Is this the right time to be in the marketplace? And we all know ICT, the inner circle trader. What sets him apart from every other trader is that he has the ability to listen. He understands when he should be in the marketplace and when he should not be in the marketplace. And that's why he's able to come out with a lot of concepts and is still able to stay profitable. And that's why you see a lot of people are flocking towards him. Why? Because over the years, you hear him say things like, "This is 30 years of me doing this." And then we get it now. He has been able to build that ability to be able to listen to the marketplace. And then we get it now. So we need to be able to come to that place as traders where we're able to listen to the marketplace and know, okay, this is the right thing to be doing now. This is not the right thing to be doing now. Okay, this is the time to stay out of the marketplace, and this is the time to actually stay in. A lot of you watching this video right now are actually skillful traders. A lot of you watching this video now are actually doing well in terms of your analysis. But the point is that you're not yet profitable, you're not yet consistent just because of this one thing. You're not able to listen, you're not able to be able to listen to the marketplace to be able to grasp, okay, what's the market telling you at every given time. You get, and that's why most of the times you enter a trade and it goes into profit and all of a sudden it goes back into loss. Most of you listen to me understand what I'm talking about. I've been there. I never get now. Even for the past last 2 weeks, I've been there. I never get now. And that's what we need as traders. We need to be able to develop that particular virtue, the character of being able to listen. And when you're able to listen, you figure out that you are going to even make more money from the marketplace than when you actually just go into the marketplace based on skill. Because forex trading is one kind of a job that doesn't respect just only hard work. How do we get it now? In other words, it's not, when I mean hard work, I mean actually hard work means seriousness with purpose. But let's talk in terms of effort. Trading does not respect just efforts or always just applying action. No, no. Trading doesn't respect only action. You get it? Trading is a kind of job or business that actually respects mindset, psychology. You get, it's different from every other kind of business. Every other kind of business starts from hard work, putting in the effort, putting in the work. But trading starts with being able to develop a mindset first. If you want to be a profitable trader, you need to first be able to develop a mindset first. You need to be able to come to terms with it, come to terms with your results, come to terms with your development, come to terms with the results, the outcome, to the time required to develop as a trader. You need to come to terms with all these things, and that's what's going to make you even come to terms with your failure, come to terms about that you're not going to be profitable all the time. When you're able to come to terms with these things as a trader, this is when you start winning. You earn, say, in the forex financial market. So that's what makes trading different from every other job, from every other industry that we get it now. So when you're able to develop this skill set of being able to listen to the marketplace, being able to be patient, which is the virtue that we get it now, you are going to outperform majority of traders in the marketplace. And that's why you see that most profitable traders are traders that are actually focused on higher time frames. You can check it even here on YouTube. Go look at those traders that are actually profitable consistently and on the long run. They are traders that actually focus on the higher time frame. Even though there's a quit on the lower time frame, they start the analysis from the higher time frame, which is the monthly, weekly, and the daily time frame. Go and check it. If you think I'm wrong, go and check it. Even your favorite YouTubers, go check them out. And now, what does that tell us? Is because your ability to be able to wait on the monthly, weekly, and daily time frame builds patience. It builds your ability to be able to listen to the marketplace. It teaches you the ability to be able to listen. And that's all you need. That's all you need to be successful. That's all you need to be consistently profitable in the forex financial market. And that's it. So that's why you've seen, for those of you that follow this channel for the longest time, you've seen I've actually pointed out time over time. I kept saying, I say you want to start your analysis from the higher time frame premise, the monthly, the weekly, and the daily. The moment you're able to do this, you're able to find that point. You figure out that trading becomes easy. It becomes a free ride. It becomes an easy ride. A lot of you are struggling right now because probably you started from the higher time frame, but you got lost along the way in the lower time frame, and that must stop. That must change. So this is something you must go on. Rather than trying to develop a skill set on based on strategy, develop the skill set based on being able to train your edge to be able to listen to the forex markets. Be able to listen, being able to be patient, to be more observant than you've been before. You can set that as a goal instead of setting a goal of I want to make so and so amount. Set a goal of I want to be able to listen to the marketplace, be able to listen and execute regardless of my emotions. Those are the kind of goals I want you to set going towards the end of this year. So that by next year, come 2024, you're going to be so surprised at where you're going to be, especially for those of you that are going to take this very, very serious. And I'm very, very sure that it's going to blow your minds with the results and the levels you're going to attain. So without further ado and without keeping this video very long, I want to just show you how being able to listen can actually make you profitable in the forex financial market. So this is on the daily time frame, and if you look right here on this impulse candle here, this is Thursday's trading on gold on the daily time frame. So we find out that the week started quite well with an impulse buy right here, an impulse buy. One would think on the next day that we're going to also have an impulse buy. Definitely, we had a short period of buy. I profited a little on this candle, but I also had a loss right here. And all of a sudden, the trade, the next day came in right here, and we can see the wick all the way to that high right there. Probably the buy that was cut short on this day was completed on this particular day. But now I want you to watch something. The moment this candle closed this way with a wick through to the sell side with a body sell, which is more like an inverted hammer right there, what can we see? You can see that the next day pushed down aggressively. Now the question is why? The question is what? The question is why? We can also see the same thing right here. The moment this hammer was formed, you can see the next impulse strongly, and we can see another impulse on the next day. I remember trading this day and also made profits on this day, which was Monday. Actually, usually I avoid trading on Monday, but the moment I saw what was going on right here, I engaged the market on Monday. So this is what being able to listen in the marketplace can do for you. If this is not enough proof, look at this. Is I believe this was last week too also. You can see this was a week to the sell side, taking out buy side liquidity. We can see price coming down, attacking sell side liquidity. What happened the next day? Impulse sell and following through all the way, targeting what? This liquidity right here. So when you're able to listen to the marketplace, it gives you an edge. You're able to see what's going to happen. Like I told you, I lost funds right here at this particular candle. Now, this was me going to trade hard, wanting to keep seeing price push higher. Though I was in profit, but I had a loss. And if not for proper risk management on this particular day, I would have been knocked out of the market. But just if I had waited just 2 more days, I would have profited, which I did on this particular day, being Thursday. I had a very good profitable day here, and I did not sweat for it. I did not stress for it. So this is something that you need to be able to do every single day, or every single week rather. You want to be able to listen, you want to be able to wait, you want to be able to be patient in the marketplace. If it requires you waiting 2-3 days for the market to set tone for you, do it. And this doesn't mean you go down to the 1 hour 30 minutes and you're waiting for the market to set stone, because when you're there you're going to see a lot of opportunities that you want to catch. And the point is that you can be right. A lot of you are right on your analysis, especially when you are looking at it from the 1 hour. You are seeing that total soup liquidity run to the sell side, that to catch the buy. Yes, you are right. But all of a sudden you are on the buy, you are profiting for a while, hoping to hold it for long. All of a sudden the market reverses against you, and you're like, wow, but I followed the model. Why didn't it work? It didn't work because of this same thing, this particular thing right here. Not focusing from the higher time frame perspective, not being patient, not being able to listen. Mind you, the daily time frame is where the bankers, you're trying to say, the market makers, those that take trades, are there getting now from an institutional level, actually focus on. This is where they look to execute from. So if this is where they look to execute from, to be silly to want to execute and start your analysis from a much more lower time frame than this. So you want to start here. Even if you're a day trader, and just come to think of it, you're a day trader, you shouldn't even ignore the daily time frame, because you want to catch the impulse momentum of a day. So you want to start from the daily time frame. That's common sense. So that's why I said from the beginning, I said common sense is not actually common, because the things that are common are usually trivialized. So without further ado and no much grammar, I'll just bring out my markup and show you the trades I took today, and how it was so much easier just being able to wait. So I'm going to drop down. Okay, let me just show you the markups I had on the daily time frame, then we'll go deeper. So we can see right here on the daily time frame. So the moment this candle closed bearish this way, I knew that okay, we've attacked buy side liquidity and we've attacked sell side liquidity, and we closed impulsively to the sell side. So my eye was on this particular gap right here, which is this fair value gap from this high to this particular low right here. And also I was eyeing this particular down close candle, which is another block. So you can see the way I marked out the high right there. I didn't mark out the body because of the body was relatively close to this particular high right here. So I just kind of left that out of the way. So I was expecting price to just break down further. So what I was doing was that I went down to the 4 hours, and at the time of printing I noticed that this candle closed down aggressively and was breaking down. So it broke structure. So we had a structural shift right here. So we can see it here, this a liquidity run to the buy side, price coming down, taking out sell side liquidity. So this is more like a institutional market structure shift on the 4 hours. So that started confirming and building the bearish bias that I had in price. So initially I had my markup at this particular area, which will act like a breaker for me. I had my markup there, but later on I pushed it higher right there, to because of I was looking from the daily perspective, that was a low right there. So I want to see price start respecting highs and start taking out lows. So I also want to see price also respect lows that have also been taken out before. So that was why I marked out this higher one here. I also marked out this one, but I eventually removed this one because price actually going into New York open, midnight open, also London session, we can see that price went higher beyond this particular breaker right here that I outlined earlier, which is the previous day low. So it went deeper into this other day's low. So that was why I cleaned out that one entirely. So dropping down to the 1 hour, we can see that price had traded aggressively into that particular area, which is the previous days, which was Wednesday's low right there. So sorry, Tuesday's low, and you can see the wick down. And you can couple that with this particular order block you have right here on the 1 hour, so you can start seeing that rejection right there. So what did I do? I was looking based on time. Mind you, smart money analysis starts based on time and price, not price and time. So you want to focus on time and price. So this was 9 o'clock chart time, which was already 7 o'clock London session. So what I did was I started looking at the 15 minutes to see reasons why I want to start taking a sell trade. So let me zoom that in properly. Started looking at the 15 minutes to see reasons why I want to actually take a sell trade. So this is that particular these are particular low from Tuesday. Yes, I believe Tuesday, and we can see the way price traded into it right there. So the moment price broke this structure right here on the 15 minutes, I had my first order right here. So I was risking 280 and going down to target this particular fair value gap right here. So my target was from this low of Tuesday to this particular fair value gap, which gave me relatively a 1 to 2 or a 1 to 2.5. So I entered it right there the moment price broke below that low right there. So once I saw this structure right here change, that was my confidence for the entry right there. So because for me this is like a momentum shift to the sell side, seeing that we've tapped a resistance area right there. So I started selling right there. So I took out my first positions, all my first positions rather. I think that would be the best word out here. Then I waited to see what price is going to do. Why? Because we've started the there's a way I trade actually recently. I trade based on every 4 hours because I've noticed that since I'm more focused on gold, I figured that we can have momentum on different candles based on 4 hours. So it's a technique I've actually developed, and I believe one of these days I'll share it here on this channel. So what I did was, as we started getting to the close of this particular candle, this was the close of a 4 hour candle. So if I mark out here, this is 12. If I go back to the 4 hour chart, you understand what I'm saying. So this is if I let me bring that out. So you can see that this is 8 o'clock candle for 4 hours. This will be 12 o'clock candle for the 4 hours. So the moment we're entering into 12 o'clock on the 4 hour candle right there, the moment you can see it here, 12 o'clock chart time, I took out my position even before he hit the fair value gap area right there. I took out all my positions. So you can see I drove into the fair value gap and started rejecting right there. So just imagine if I'd held it past that zone or even past the um fair value gap, you can see I would have lost some momentum of the profit and I wouldn't have first taken these partials right there. So I took these partials right here, good, and that was very nice. I can see price retrace deeper where into what's fair value gap right there. So you can see the fair value gap. I marked it out. What happened? I went down to the 5 minutes, and the moment we had this momentum shifts to the sell side on this particular candle, I had another entry. And where was I targeting? I knew that we've tapped into the fair value gap. All I wanted to see was if price was going to break past this low, then we're going to get to this particular order blocks high, which is this particular line right here, this trend line right here. And what happened? I entered right there, putting my risk to reward here, my stop loss above that, which is I was aiming for a 1 to 2 risk to reward. And the moment we are approaching this particular area, I took out my positions around this particular zone. So you can see how it was kind of very easy to engage price right here, and I didn't sweat so much for it because I didn't even bother about trading New York session anymore because I'd made all the money I wanted to make on this particular sell right here. You can see how stress-free it is. If I take the pips coverage from that high to this low, that's about 1,400 pips in just in just 2 4 hours candle. You get what I'm trying to say? An easy ride to the sell side. You get it now. Unlike Tuesday right here, unlike Tuesday right here, we had to first buy, then we now had to sell, and the sell was not that smooth right here. So this is what happened when you actually wait for the market and listing to the marketplace. So I want you to go into your charts and every single day, every single week, learn to listen to the marketplace. Think like a professional trader. Even ICT, you notice that it trade the lower time frame, but it starts all his analysis from the higher time frame, the daily, the weekly, and the monthly. And if you do this, you're going to see that your trading is going to improve over time. And it's not about how much you make, it's about can you keep making that money consistently. It's not how much you make in one trade. I don't be getting out. Don't be fooled by I made so and so amount of money in one trade. Is can you keep making it consistently? Because in this business that we are, you are just one step away from losing it all. You know what I'm trying to say? So that's just it. So it's not about I made so and so amount of money. The 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 market does not respect old ballers. It doesn't respect old ballers. If you were balling before or you had wins before, the market doesn't respect that. You get the market respect those that are consistent, those that care about it. It's more like a jealous girlfriend. So I believe you found value in today's video. If you do, hit the like button, the subscribe button, and see you in more videos. I'm back.